Hey, Doug and Pat here with another episode of the Wealthy Gym Owners. And today we're going to talk about all sorts of fun things financial. And that's going to be everything ranging from paying off gym debt to navigating taxes. So, Doug, get us started.
Yeah, it's not I would say, I kind of nerd out on the topic, but I know for most of us, it's not a fun topic to talk about taxes or debt. But I think there are two realities, right? Like there in business, there are certain realities that we have to face, whether we like them or not. And taxes is certainly one of them. Debt is optional, but I think at one point or another, all of us have probably been either currently facing debt or have faced debt in the past. And so I just wanted to kind of chat through some strategies that I've used and some strategies that I've seen our gym owners use to navigate both of those. So we'll start with the one that's necessary evil regardless of your situation, which is taxes. And the first thing I would share with that, and this took me a while to learn, is there is a big difference between tax strategy and tax preparation. Right. So tax preparation is what we all know, which is, okay, year's over. Either I got to do it myself or I got to use some either firm or platform, whatever, to prepare the taxes to get those submitted. And that's necessary. It's the law. We have to do it. However, it's similar to like when I coach up gym owners with their scoreboard, I want to be a lot more proactive with it. So tax strategy would be saying, okay, we are in the year now. We can, like, for example, we're recording this in basically, let's call it almost the midpoint of the year. We still have the whole second half of the year to alter strategy and consult with, I'm certainly not a CPA, so you should certainly consult with your accountant and figure out, is there something that we need to do this year that can reduce our tax liability? Because ultimately, in my eyes, that at the end of the day, in a safe and appropriate way is what I'm aiming to do, is to reduce the tax liability or the amount that I owe. So just with that mindset going in, it's not just about the tax preparation. It's making sure that we have a conversation throughout the year with whoever's doing our taxes to make sure that there's anything that we could be doing. You don't have to be the one coming up with the ideas. It's certainly not your wheelhouse oftentimes, but there are people that it is their wheelhouse and they can maybe advise certain strategies that if you execute on now could save you, but if you wait until the year's over, it's too late for that year. The other thing I would say to think about with taxes is this is especially relevant for businesses in years, like broadly speaking, I don't want to say years, but once you start making a profit, right? Once you start making profit, gyms pay taxes, like most businesses pay taxes on the profit. So even if you grossed 300K, if you didn't take a profit, if you didn't make any profit, then you're not going to have a tax liability. But I remember my first year, didn't have a bookkeeper, had this, like, he was basically on his deathbed accountant, like old school. Everything was like back of napkin accounting, hand-filled forms, all that stuff. And the first year he was a referral. Like I didn't know what I was doing. And so it was cheap, a couple $100 to do your tax return. I was like, perfect. And first year was fine, filed the taxes, no issues. Well, second year comes around and he does our taxes. Again, at that point, there was no strategy. It was just prep. And all of a sudden I get this massive tax bill. He's like, you owe all this money. I didn't have that money sitting around. And so that was kind of my eye-opening to, well, of course, I was upset that he didn't warn me that I was going to have this tax bill, and certainly found an accountant that had a little bit more proactive approach. But the structure of our entity, once you start making a profit, a lot of us as gyms you should at least have the conversation with your accountant about how you're taxed, right? Most of us are the owner or in a partnership within our business. And so how you're structured, most commonly, as an example, would be like an S corp, where you can be taxed as an S corp and you can take a reasonable salary and you're not paying self-employment on that, which is a huge tax savings. So I'm not saying I'm the expert in this and I don't want to go super into the weeds to overwhelm you. I would just say that if you are making a profit, just confirm with your accountant that you are properly structured entity-wise. Because in that case, the reason for the tax bill was we were just an LLC, taxed as an LLC, not taxed as an S corp. And so I was paying taxes on every penny of profit, which some of that profit could have been paid as a salary to save out on taxes. So last couple things with taxes, I would say, would be to make sure that, I know it's hard to think about in day to day, but make sure you're taking advantage of being a business owner with the retirements that you have available to you. The easiest one would be a simple IRA, and you can find your local broker advisor to set that up for free. But ultimately, what we're trying to do is to show on our books that we have as little profit as possible. And it kind of sounds silly as an owner that you don't want to be profitable, but you basically want to make sure that you have that profit is allocated somewhere. So if you think about it, if you just pay yourself 10 grand, you're going to be taxed on that 10 grand. If you are able to take that 10 grand and push it to a retirement account, like a simple, yes, you're not going to have that money available to you right now. It's going to go sit in that account. However, that now goes against your bottom line. And so you're not having to pay taxes on it. So just a couple strategies to think about as you navigate the fun world of taxes. And I know it's not an exciting topic, but just a couple things to make sure you're taking advantage of, because I do think, unlike W-2 earners, we do have some advantages as business owners with our tax strategy.
So that was half our topic today. We want to cover some tax strategy, tax planning stuff, but also I'm talking about paying down gym debt. So shift gears and let's talk about that for a little bit.
Yeah. So this, I think debt is something that for some, I do get it, but people in general don't like to talk about money, right? And so all of a sudden we start working with a gym and we realize that they have debt that they're trying to pay off. It's certainly, I think, an important part of the equation when you look at your overall numbers and just like with our taxes, have a strategy for it. So the first thing I would say is we have to, and this goes true for whether you have debt or not, is we have to get a handle on our numbers. We have to know exactly how much, and I'm not talking like, I'm generally not a fan of like your profit and loss statement that your bookkeeper or your accountant shows you, because frankly, as a gym owner, like you're not going to understand half that stuff anyways. And what I'm more looking at is like, how much revenue does the gym create in a month? And how much do I have to spend in that same month, right? And part of that spend is, of course, going to be the payment towards this debt. But it's also going to factor in your rent, your utilities, your payrolls, all that stuff. As a client in our coaching program, one of the first exercises I take new clients through is doing a spending plan where they map out in the month, okay, here's everything, line by line, everything that I have to spend in the upcoming month. And now we can push that or balance it against how much revenue we're projected to create in that month and figure out, A, is there a profit? And B, if there isn't a profit, how much revenue do we then need to try to aim for to become profitable? So we're not just guessing how much revenue we need to generate. We can precisely say, hey, our expenses are $12,500. We need to make at least that to be profitable, not, hey, I just want to make 15 grand this month, right? So certainly getting a handle on your numbers. Once you have that, I think it's vital to go through and audit all of those expenses. Each one of them should have a return on investment. So they have to, like, your rent has a return. I know it doesn't seem like that, but that is where you're providing your service. So without paying rent, you don't have a place to provide your service. Your people, I know we want to treat them like people and be kind to them and nice to them, but they also need to produce an ROI. If you're paying somebody 30 grand a year in payroll and they're not producing more than that, then it's not healthy for the business. And then, of course, all the small ones that add up, right? The death by 1,000 cuts, right? It's the $29 here, the $99 here. You add up 10 of those, and all of a sudden that's $1,000 that could be going towards this debt. So the second thing I would say is expense audit, where go through, is there anything that is not producing an ROI that you can cut? And then the third and final thing I would say with the debt is, okay, now I've got a handle on things. This is where and this is a strategy that I've seen work for, like, my wife and I paid off $300 and something thousand in student loan debt. gym owners that we've worked with have paid. We just had one of our gym owners pay off like 150 grand of their idle loan. And it's the same strategy, which is once you've got your numbers, once you've got your audit done, I think it's in most people's best interest to go in and manually make a second auto pay. So most of your debt is set up on auto payment repayment, right? So whether it's credit card debt or small business debt, whatever the debt is, you have a monthly payment that you have to make, right? And that oftentimes is set up as automatic payments. Well, human behavior has shown us that we're probably not going to manually go in and pay extra, right? However, if let's say that payment on the first of the month comes out, if you then, through most of the platforms nowadays, you can go in and set up a second auto payment that is done, say, on the 15th of the month, just to spread it out. So now you're making 2 payments per month, but more importantly, it's not a manual payment. You go in, you set it up once, and it's a second auto payment, and you treat it just like any other bill, right? And that, I think, regardless of the amount, even if it's $100 extra bucks, because it's an auto pay, because now you just treat it as part of your monthly bill, you're going to figure out a way to make that happen, as opposed to like, oh, I'll just pay some extra at the end of the month if there's any left over. The reality is there's either none left over, we find something else to spend it on, whatever. So I'm a big fan of double paying in the month, but in a way that is set up on auto pay so that you don't have to forget it. So that's a real tactical strategy. And that's how most of the folks that we work with end up paying this off in an accelerated way, because you just find a way to make the payment, right? You find a way because it's set up automatically. So that's my nuggets on debt.
Very good. Well, I mean, obviously, these are not topics that people get super excited about. They're not stuff you see people run Facebook ads to talk about, but they're just part of being a business owner. They're part of hopefully even growing into being a wealthy business owner. I mean, these are just part of the puzzle for you. So thanks for digging into that today. And that's another episode of the Wealthy Gym Owners signing off.